Hello, happy Sunday and welcome back. Today I want to walk you through two Forex pairs, weekly, daily, for our top-down analysis. I want to show you how I create my trade scenarios, what I look for in a Forex pair that I consider trading, and how to come up with trade ideas for the next week. So first we start with the Aussie Canadian dollar. This is the weekly chart. Here we just spend a short amount of time because we only want to find out the general direction and if there are any important key support and resistance areas ahead. So first you can see we have been in this uptrend here recently. We found support here after this demand zone here at the bottom, and now price is moving higher into those highs, and this is exactly why price caught my attention. So if we look here, there is a little supply area, although it's not ideal, and it has been consumed for the most part of it as price when price dipped into it here. But now it seems price is making another run at it. Here are also a few highs that we will see on the daily chart. And generally, I always look for those Forex pairs that come close to those key resistance areas or support areas after good trending moves. So we can go down on the daily chart and then look for strong support and resistance areas that are ahead of current price. And we can see very nicely this trending structure here on the daily chart. The purple line is the 20 SMA, which I use as my trend indicator. And I always look for pairs that have been trending above or below it for quite some time. Even better, we saw some rejections at the 20 SMA. And this shows us that the markets are looking at the 20 SMA, and it's a good indication of how we can use the 20 SMA going forward. And when we look to the left, we can see a few very interesting resistance areas. So first I will mark this one here. You can see lots of highs in this area, lots of supply. Price made few attempts at it, but every time got rejected. And then we sold off here very strongly. And now it seems like price is making a push into this area again. On Friday, we moved almost broke through the opposite to the upper end, but then we got rejected a little bit lower, although this is still a very strong bullish candle. And a little bit higher, we can even see another high, which has not been tested for quite some time. And of course, this one will then be our major supply level here, starting at 101. And also worth noting is here the parity level, the big round number 1000. Obviously, many traders will have this on their charts, and you can see if we draw our line here close enough, then there's a lot of trading activity around this area. So parity is always an important level to have on your charts. We can go down to the day, to the 4-hour time frame, and this is where we will time our entry trades. And you can see this is a little bit of a messy price action. So it's very important to have clear and defined price and trade scenarios. So at first glance, we can see that there's probably something like a trend line here in play. So let me try to find it. This seems like a good area for the trend line. So you can see we started here, this trend line here after, or at the beginning of this rally here. Obviously, if we pick the lows here, then we can come up with a good trend line. So we choose this one, very strong reaction here. This is where then the trend line got confirmed. And the final force touch is then allows us to very precisely draw this trend line. So the first and most important thing is about this trade is, if you've been following my trades or my analysis, then you know I always look for the 20 SMA as my tiebreaker, and I only take trades once the SMA is broken. But if we zoom in a little bit, you can see that price action is very, very messy here at the 20 SMA, and price does not seem to care too much about it. So we are not looking at the 20 SMA as our final entry criteria or final entry trigger here at this one, but we should shift our attention towards this trend line here. So let me just draw an arrow. This will then be my entry trigger that once price finds a lot of selling momentum and accelerates to the downside, then we would enter here on the break of this trend line. If you are looking for an earlier entry, and this is what I probably are going to do if I see new selling momentum, is that I use a small first entry to get into this trade once we break those highs here. So you can see I connected this support level. Here lots of resistance. Here we overshot it a little bit as support, but it's a strong enough level that I will have on my charts. It's a little bit below the 20 SMA, so this gives us additional confirmation. And if we look a bit lower, then we can probably see another support area here at those larger wicks. So if you can see such large wicks on any pair, it's very likely that if price comes back into this area, you see a bounce or some type of reaction, a prolonged consolidation, because those areas are usually a lot, they show that there's been a lot of trading activity and trading interest. So if price comes back into it, you can expect to see some type of reaction again. And so you have two very nice support levels where you can then time your trades. The first one, the second one, and then also this trend line here. And if we go back, just let me mark the daily 20 SMA on this chart, and then we can see where it is actually on the 4-hour time frame to get a bit of a reference point. Very nice. Here you can see this is where the daily 20 SMA is currently, and it falls right into this cluster. So this will probably be a very important key area if price finds more selling momentum and then sells off. If price can close below this level, which is the 20 daily SMA, this will be a key area. And keep in mind that this is our short reversal. If price keeps moving higher, then we are not going to do anything. We will just wait at the sidelines and very patiently wait until we see confirmed selling momentum. And actually, let me put a price alert here. Very easy to do in TradingView. You just hover over this price level where you want your price alert to be. You click on a plus, add alert, and it's done. So now we don't have to watch this chart anymore. We would just wait until price finds enough selling momentum and turns around, and then we get notified once price is into this area. My second most favorite pair of the week is the New Zealand US dollar. Let's start on the weekly chart as well. And you can see we are not having this nice trending behavior right now, but also once we go lower, very interesting setup. So first of all, I always like to see when price moves into such an area where you've previously seen support. Let me just mark this for you, and then I will explain why. So although this is not a textbook example, what often happens is that once price moves back into such a support zone, then it retests it as resistance and moves lower. So we can see that actually very nicely here. We had this support area here. It acted as support here. Price broke below it, retested it as a resistance, and then sold off. I'm pretty sure we can find more such examples. Yes, you can see very nicely this level has been resistance. Price shot above it, retested it as support, shot higher, came down, broke it. Here came a little bit short, but I'm sure if we adjust this to those lows, yeah, you can see then it retested it as the resistance here and then sold off. And this is a very common behavior. Those stepping stones you can very often see. Unfortunately, this time it's not very clear, the price action, but nevertheless, when we go lower, we can see a very nice setup. So you can see the daily chart is a little bit messier than the previously what we saw on the Aussie Canadian dollar, but nevertheless, you can see a very nice top pattern here. We can even draw our head and shoulders, which is always a good sign that something in the trend structure has shifted. When price goes from making higher highs, higher high, the head is the final higher high. but it just barely broke those highs here. And then now recently price failed to make another run and has been closing lower. So this shows you already that something is changing in the buyer-seller dynamics, and we can use this information then to time our trades. So on the daily time frame, I also look for support and resistance areas. Obviously, this would be considered our neckline on the head and shoulders. And if you listen to conventional technical analysis, you wait for a break of this neckline before you short anything. But we can time our trades on the 4-hour chart with this information a little bit better. And now we can go down to the 4-hour chart, where we then see the microstructure a little bit better. So, and even on the 4-hour chart, we can now see again on this area here that we have a little micro head and shoulders on our 4-hour chart as well. This is a very nice context here to our trade. You can see that even now price is moving back into this area here. So you can see price has used this level previously as support and resistance. And now recently on the sell-off after the right shoulder, price found some support here. Keep in mind we had some good US data on NFP Friday, and then here we saw this large sell-off. And so it makes sense from a macro and a technical perspective to see more bearishness going into this new week. On the way lower, there are a few levels that you can see probably acting as support. This one right here has been support, support, resistance, resistance, and support again. So once price breaks below this level, we could probably see more bearishness and a good entry trigger. And here can be your first take profit. And this one again, you can see very nice, those wicks. And those wicks, where are they finding support? Right into this major demand zone here. So you can see this is a nice demand zone, although price has been trading in it a little bit too long for my personal taste. But then nevertheless, price shot up. A lot of imbalance, a great imbalance here. Price came back into it, just briefly touched this demand zone, but still found more buyers and then started rallying. So you can be very sure that price, once it reaches this area, will be stalling for a while, maybe drift a little bit sideways. But if we are finding new sellers, then keep in mind where this arrow comes from. It is from our daily head and shoulders, and it makes perfect sense in the overall context here. So our first micro trade can be on the 4-hour after we break this level up into this demand zone, and then once price finds enough selling momentum, we could get our second trade here below this neckline, which we got from the daily head and shoulders pattern. And if you want to be on the safe side and don't want to miss anything, you can place your first alert here. Just hover into this area, press add alert, and then TradingView adds it for you. And then also here on the neckline from the daily head and shoulders, we can place another alert, close it, and now you're ready to go for the new week, and you won't miss any of your trade signals or price alerts. If you like my video, just leave a comment below, give me a thumbs up, and if you have any questions, I'm always happy to help out. So just leave a comment and let me know what you think.